Look at the intraday chart. Quite interesting because it was a big beat and a big gain, which has now turned into a loss by some 0.2%, which is very interesting. As you know, Jim Lebenthal loves this stock. I think it's his biggest position. He joins us now to discuss what is going on. Man, you were crowing on Twitter. If you don't know what to do with this stock, I can't help you. You gave all the metrics. They beat on this. They beat on that. Free cash flows this. The guidance was amazing. Why the stock reverse?
You know, it's pretty annoying, Scott, but it seems to happen with every earnings release that the stock goes down, no matter how good it is. And last quarter was a blowout as well. The stock went down. Frankly, that's why when I was on with you yesterday, I didn't make it my final trade, but I'm making it my final trade right now. And here's why. Analysts have estimates for this year. Free cash flow as measured by EBITDA, $4.8 billion. The last 12 months, trailing 12 months, the company did $6 billion in EBITDA. And now they're seeing price hikes of 17%. They raised their guidance on realized price for this year by 17%. They're seeing volumes pick up, including for the auto manufacturers. And so this is going to be a gargantuan beat to what analyst estimates are for this year's EBITDA. Why is the stock down today? It's pretty annoying. Is it the market? Is it that people are taking profits maybe? It could be. Stock's up 35% year to date, 70% in 1 year, 660% in 2 years. So it could be some profit taking. But let me be very clear. This is a buy right here at this price. You should be buying this.
I felt like you were making the case to why you should take your profits and run and be happy that you did. 700% in 2 years. I mean, you yourself said, I mean, the market don't lie. Right? If the stock goes down every time they report, regardless of how good it is.
The market is a dingbat on days that Cliffs reports. I mean, it's just a dingbat. I wouldn't follow this market into a petting zoo on a day like today. But having said that, I'm just going to go to the numbers that matter, because this is what matters to an investor. $6 billion of free cash flow, EBITDA, in the last 12 months. That's versus a market cap of $15 billion. That's a 40% free cash flow yield. Find that somewhere else for me. Find that in FANG. Find that for me in an ARC stock. Find that for me anywhere. You can't. That's why you got to buy this.
Even if you're concerned that the economy is slowing and is going to slow further?
That's a great question. It's a really good question. You have to make your call on that.
Isn't it just an obvious question?
I just listened to the conference call this morning. Lorenzo Gonçalves gave absolutely no indication that things were slowing down. This quarter, first quarter, he had higher shipments to the auto OEMs since COVID began. So he's seeing the pickup in autos right now. We know that as soon as they can produce cars, get the chips to produce them, the demand is there. He's just not seeing any demand slowdown.
Yeah, not yet, but we spent the entire, part of the first block talking about what the Fed's trying to do to demand. And it's going to take a while. It's a totally
legitimate point. It's a completely legitimate point, Scott. However, the facts are these. The Fed has raised 25 basis points so far. They will raise, it looks like, 50 basis points in May. And for me, I said this to you yesterday, let's take a look at the two PPI and CPI reports that come out between now and the June 15th reports. I'll make my judgment about what the Fed will do based on those reports. I'm not going to telegraph it now because I don't know.
Okay. I mean, all right. Steve Weiss, I mean, you've made the argument that this stock, in your words, from a debate that we had in overtime about a month ago, that it's not a growth company. I mean, Jim literally just made the exact opposite argument. So not for the sake of just arguing with Jim, but why is he wrong?
First of all, Scott, give me a minute to recover from the use of the word dingbat. Look, I don't know that he's wrong. It's in his mind, but I would tell you in anybody else's mind, it's a steel company. It's cyclical. They may be fully integrated. You have a phenomenal CEO, but at the end of the day, it is not a growth company. If auto demand slows down, and it will, we saw Carvana report their first loss in a long time, then they're going to suffer. So look, I sold the stock in the mid-20s. It was, one of the few that, maybe the only actually, that I sold that continued to go up. Every other sale had been a good sale. Everybody loves the stock, despite what's going on today, which is more market-related than stock-specific. But I just think if you're thinking it's a growth company, and if that's what other people are thinking going into this, then you should definitely sell the company, because it is not, period.
Josh, do you have an opinion of this in this debate?
I'm with Jim, and just in terms of like we just started earnings season last week. There have been some companies with great reports where the stock finished the day down 7%. It's only inexplicable if you don't pull the lens back further and then say, oh, wait a minute, the stock went up 40, 80, 100-something% over the last few years in anticipation of this economy getting back to full potential. And now we're here, and it's a sell the news response. So it's annoying. I've owned plenty of stocks where you get the news right, but you get the market reaction wrong. That's why the game's not easy.
Right, but
if it were as simple as, hold on, company ABC is going to have great earnings, therefore I buy company ABC. That's what Howard Marks refers to as first-level thinking. It's not helpful. It's anything intuitive is not helpful.
Yeah, but you
if
made
everyone
a whole,
already agrees with you.
You made a grand presentation with your words of the year, demand destruction, and now you're telling me that it doesn't matter for a stock that is all about demand and whether it gets destroyed or not?
I'm not saying that at all. What do you mean? It does matter, but that the stock is seemingly reacting to an earnings report today, but it's not. The earnings were widely expected to be good. Jim was right. Everybody agreed with him. Today is a bad market sentiment day. Therefore, as my British camp counselor used to say when my soccer ball hit the goalpost, unlucky. It's unlucky. Sorry,
yeah,
Jim.
but he's not making a one-day call. He's not making a one-day call. He's making a longer-term call.
I get that. Now you got to wait 90 days to see if you get another upside earnings surprise, and you got to hope the market doesn't go down 600 points that day.
Let me help people out here. All right, the bulk of Cleveland Cliffs business is on contracts, fixed contracts with price escalators. This is not something that there's variability, like if hot rolled coiled steel falls out of bed next week, like they're exposed to it. They've got long-term contracts in place. Look, all I can tell you is this: if the stock goes down meaningfully, they've got $6 billion of free cash flow. They've already authorized a $1 billion share buyback. They'll buy back shares. And look, as far as my use of the word dingback goes, I did get a text from Liz Young saying she liked it. I'll take her opinion over Steve's.
And by the way, I did hear the Cliffs, your guy, the CEO on Squawk this morning, and he did, and you make a great point about the fixed contracts, right? So they don't have to worry about the variability and the volatility that some others otherwise might because of the way that they've done their business. So your points are well taken.
Scott, I'm so sorry to interrupt you, and I'll make this quick. I haven't even talked about the fact that they control all of their raw inputs domestically. They're not reliant on pig iron from Ukraine. They mine their own iron ore. They bought a scrap metal company last year. Their margins are about 5x what their competitors are. Let me rephrase that. Their cost of goods sold is 1/5.
The only thing that matters is, do people want to buy or sell the stock? That's it. Everything that you're saying is true. It doesn't matter right now. Do more people want to buy the stock versus do more people want to sell it? And right now, because it's a cyclical and because markets are reacting very strongly to Bullard and a whole host of people, more people want to sell it. And it's unfortunate because it's a great story. Fundamentally, you nailed it, Jim. You deserve a lot of credit, but there's no dollar figure from getting the earnings right. The dollar figure comes from getting the stock price right. And sometimes that's hard to do because the market environment won't cooperate. So you can get it right and still unfortunately be susceptible to that.
Josh, I agree with what you're saying about market conditions. I have no argument with you whatsoever. My point is, to be clear, I'm not crying in my coffee about this at all. The company is outperforming. I expect, for the reasons that I listed, it will continue to do so. And on earnings day, this stock acts like a goofball, all right? That's why I didn't make it my final trade yesterday, but it's my final trade today as strongly as I can make that case.
We're making that your final word for today, too. We got to go. Have a good weekend. We'll see you next week. That's Jim Lebenthal. Birthday